Hi, I'm Josh Duvall, certified financial planner, chartered tax consultant from Duvall Wealth and Tax Planning. Wanted to bring you a quick video to highlight a couple of the, in my opinion, most relevant portions of the One Big Beautiful Bill Act, which was signed into law right before the July 4th holiday weekend. It does include some provisions that I think will be very relevant and impactful for a number of my clients, including high income earners and small business or pass-through owners as well. So first off, I think the most important thing is apart from all of the larger sort of corporate provisions that'll impact the economy and corporations, but as far as individual small business owners or W-2 employees, there are a couple things that I think are really impactful. Number one, the most impactful, in my opinion, is the reintroduction of the increased state and local tax deduction. So many of you are aware that you only get credit under former law. You only get credit for $10,000 of your state and local taxes. So if you live in New York, New Jersey, California, high income tax states, high property tax states, you are not getting a full deduction. That has been changed. You now get up to $40,000 of a state and local tax deduction as opposed to 10. And that is connected to a income phase out of modified adjusted gross income of 500,000 for married filing jointly couples. What that means is you no longer get only 10 grand. You're going to be able to get potentially the full 40,000 depending on where your income is, which makes a drastic difference. Just think about, 22, 24, 32% tax on a $40,000 or $30,000 state and local tax deduction, right? It's thousands of dollars, in some case more than $10,000 of actual tax reduction. So this is going to be vital. It also goes into effect in tax year 2025, which I think is pretty amazing. I figured most of this would happen in 2026, but the state and local tax deductions take effect in 2025. Another big provision that I think is important is the increased child tax credit. So for those clients that have children that qualify for the child tax credit, you are going to get $2,200 per child instead of just $2,000, as long as you qualify from an income phase out standpoint. So that is also a dollar for dollar reduction in tax. So not a deduction, but an actual credit. The other thing I think is valuable for some of the older clients is that they have increased the senior additional deduction up to $6,000. Previously, there was an age 65 and blind status tax deductions that added, I believe, $1,350 for each. That has been moved up to $6,000. So, senior citizens are going to get the normal standard deduction or potentially the increased itemized deduction because of their state and local taxes, as well as an additional tax deduction for being over age 65. We've heard about the no tax on tips. We've heard about the no tax on Social Security. A lot of those are going to go into effect for sort of lower income people or lower income households where those will have a larger impact, but those are important provisions also. The savings account with $1,000 for every new child born. We'll see how those details play out. If you'll be able to invest that, if you'll be able to pull that out after a certain amount of time, if it's just a government bond, I don't know exactly what those details will look like. So more of that information will come out. The other thing for small business owners, so this is Schedule C, partnerships, S corps, is that the QBI, qualified business income deduction of 20%, is being codified. So that does become part of the law. There's no more sunset provisions on that. It is something that you're going to continue to see for the small business owners, as well as that decreased limit of being able to deduct materials and supplies and inventory instead of using cost of goods sold. You can deduct those as direct expenses in the actual tax year they were spent. Those sorts of provisions, which many of you have been taking advantage of, will also be part of this new legislation. So we'll see how it comes to fruition once the details are worked out and all these things actually go into effect. But again, I think the maintaining the current tax brackets that we have, which the potential was for them to revert to the pre-Tax Cuts and Jobs Act, which would have been a massive tax increase for most people, maintain the same tax brackets. We get the enhanced child tax credit, the enhanced SALT deduction. We get we maintain up to $750,000 balance for mortgage interest, which again is a lot of mortgage interest that you can itemize. The new accounts for children. So there's a number, keeping this QBI, there's a number of things that for my clients and for many of you that are watching this will be very impactful and beneficial from the tax standpoint. So just wanted to make you aware of that and bring that to you in a short video. If you have questions about how this impacts your specific finances, please feel free to reach out, josh@duvallplanning.com. Thank you so much. Hope you have a great day. Bye-bye.